There are very few opportunities you will ever witness in your lifetime of investing that would have this impressive of a set of criteria to examine. Massive increasing demand in 3 or 4 uses. The plurality of demand is unusual in the commodity in and of itself. Military, green, digital, monetary. The industrial applications, you have a gazillion, solar panels and medical devices and water purification and on and on and on. Silver is needed everywhere. And yet it's disappearing in nature. It's gone from 16 to 1 for 5,000 years to 7 to 1 mining ratio. And that the price is at the upper end of the stratosphere in terms of where it's been in its 5,000-year history. This represents less than 1/10 of the time that we've seen an 85 to 1 price ratio. Let's talk about silver for a minute and why the price action, while it's maddening in many respects, I agree, but why it really doesn't make that big of a deal in the end. In fact, it's a subsidy, if you will. So let's start with the fact that we've got India right now, who has just come out and said they're going to double their silver imports this year. And just by looking at some of the numbers that we've already seen, in February, their imports surged by 260%. And they bought in February alone 2,295 tons. A lot of times these statistics come out a few months after the fact. And putting that amount into perspective, the 2,295 tons, you put that into perspective, and it's 70 million ounces more silver than the United States Mint has produced in American Eagle silver coins over the past 3 years combined. So you got India, who is on a pace to accumulate somewhere in the neighborhood of 7,000 tons this year. Compared to last year, they did 4,550 tons, which was a record year. They're accumulating silver at a level the world has never seen before. And, this is something that should not be taken lightly. And then, of course, when you and I did our interview with Sean, he talked about the fact that China is indeed flying around Latin America, buying the doré, buying the concentrate, paying much higher premium than the West will pay, and sending it home to be refined. And therefore, it doesn't come off of an exchange. It doesn't affect the price so much. And yet they find it important enough to accumulate silver to whereby they are putting as high as a $4 premium. It's backed off a little bit. It's over $3 premium. It's north of 10% on the Shanghai price that they will pay for silver delivered to Shanghai versus what you can get it for in London or New York, and therefore incentivizing arbitrage. So they're the second largest producer in the world. They have an elevated premium so that they can attract anything that's not nailed down by the sophisticated traders who can buy in the West and deliver in the East. And now I've had it validated by Sean from Dolly Varden and by others like Keith Neumeyer, who talk about the Chinese going throughout Latin America, paying much higher than the West will for unrefined silver in doré and concentrate form, and shipping it back for refining in China. Huge deal. Of course, we can talk about the Samsung battery that everyone's talked about, the solid state battery that will achieve such benchmarks as a 600-mile radius, 20-year lifespan, and 9-minute charge. My daughter owns a Tesla, and I will tell you that it gets at best about 350 to 400 miles, and it's the extended range version. It takes at minimum, if you use a high power charger, I forgot what they're called, the quick charge that you can find like at a Target or some of the malls or whatnot that Tesla has all over the place. Minimum of 45 minutes to an hour. If she charges it at home, which is the 240 watt current, I believe, the same level that your clothes dryer runs off. If it takes all night, it will charge by the morning. And of course, the lifespan, 20 years, I guess that remains to be seen how long the Tesla batteries last. But this is the real deal. And it takes as much as a kilo of silver per battery. And they're already in talks with manufacturers like Toyota and whatnot. So I'm sure Elon Musk will figure that out too. And the expansion of uses for silver is dramatic. We find out that 2024 will be another massive deficit. It's a structural deficit now. It's the 4th year in a row that we've seen a deficit between supply and demand. It will be as much as 215 million ounces. It's the second largest in more than 20 years. So this is something that, continues to, more demand than supply, coming out of the ground at 7-1, yet priced at 85-1. I don't know if I've ever seen a better value in every way. Structural deficit, increase in demand in green and military, as the pickaxes talked about, in monetary, in things like the car batteries, all that stuff, and yet the price is befuddling. And then we see this, and this is something to me that really betrays all of it. And that is, just this week we saw 3,830 silver contracts delivered, right? Delivered. And that doesn't sound like a lot. Only 3,830. Multiply that times 500, you get 19,150,000 ounces delivered in one day. Now, who's got that kind of money to deliver that kind of silver? This is something that is accelerating. So you see massive deliveries, a supply-demand deficit, increase in uses, a 7-1 ratio between the price of gold divided, or silver into the price of gold, is 85-1 right now. We'll call that man's ratio. God's ratio, the mining ratio, is 7-1 and falling. I don't know that you could ask for a better investment in every respect, ever. And so I think it doesn't help the fact that the price is counterintuitive. It makes people want to bang their head against the wall. But at some point, all of these facts have to align with reality. And this is what happens when you suppress and manipulate prices, where the LBMA admits to trading 290 million ounces of silver per day, but they say that's 10 times understated, because they only post the final settlement numbers, which would mean they're trading almost 3 billion ounces of silver per day. That's 3.5 times annual global mine supply, which is decreasing per day. They only have 300 million ounces that do not belong to someone. They have 800 million there, which, by the way, is real damn close to the lowest level they've ever had at the LBMA since they started keeping records. But 500 million plus, according to records, belong to the ETFs, SLV and Bullion Vault and all the others that are there. That means 300 million ounces, yet they're trading, they admit, to that whole stash every single day, and then 10 times that amount from there, minimum. So yeah, it's a situation where, you have to have strong fingertips, man. You got to hang on, and you got to realize that there are very few opportunities you will ever witness in your lifetime of investing that would have this impressive of a set of criteria to examine. Massive increasing demand in 3 or 4 uses. The plurality of demand is unusual in the commodity in and of itself. Military, green, digital, monetary. So within the industrial applications, you have a gazillion, solar panels and medical devices and water purification and on and on and on. Silver is needed everywhere. And yet it's disappearing in nature. It's gone from 16-1 for 5,000 years to 7-1 mining ratio. And that the price is at the upper end of the stratosphere in terms of where it's been in its 5,000-year history, 6,000-year history. This represents less than 0.1% of the time that we've seen an 85-1 price ratio. In every respect, I don't know that you could find a better fundamental set of criteria to invest in.